Taiwan Semiconductor is up almost 10% today after releasing a great earnings report where they beat on the top and bottom line. Taiwan Semiconductor also released a great outlook telling us that AI demand for the next few years looks incredible. After this earnings report, I decided to determine if we should buy Taiwan Semiconductor today. I'm going to first look at the fundamentals of Taiwan Semiconductor with my 7-step stock analysis. And at the end of the video, I'm going to do the most important part where I will see what we should pay for the stock today using a value calculator. The first metric that I like to look at is the PE ratio. The PE ratio is the price of the stock divided by the earnings per share. I want this to be greater than 0. The reason I want this to be greater than 0 because if it's greater than 0, that means the company will make money. So we want to see Taiwan Semiconductor have a greater than 0 PE ratio. And Taiwan Semiconductor actually has a PE ratio of about 33 right now, which shows us that Taiwan Semiconductor is profitable, and that is a check mark for my first metric. Next, I like to look at the forward PE ratio. The forward PE ratio is basically the same thing as the PE ratio. However, it is the price of the stock today divided by the future earnings per share. Unlike the normal PE ratio, which is divided by the earnings per share today. I want this to be less than 30 to help show that we aren't paying too much for the company. Taiwan Semiconductor has a forward PE ratio of about 23 right now. So that is another check mark and shows a pretty decent valuation. The third metric that I'm going to look at for Taiwan Semiconductor is the revenue growth rate. I want the revenue growth rate greater than 5% to show that the sales of the company is overall growing in the right direction. Taiwan Semiconductor has a revenue growth rate of about 16%. So this is much greater than the 5% we wanted, and this is actually a pretty fast rate for such a big company. So that is also another check mark. The fourth metric that I like to look at is the earnings per share growth. Similar to the revenue growth, I want the earnings per share growth to be greater than 5%. The earnings per share is basically the net income. However, it does take into fact the amount of shares the company has. So if they are buying back shares, this will increase the earnings per share growth rate at a faster rate. And with Taiwan Semiconductor, their EPS growth rate is about 22%, which is also much greater than the 5% that we want, which indicates that Taiwan Semiconductor is a fast growing company, which basically correlates with the stock price as long as we pay the right price for it. So that is also another check mark for Taiwan Semiconductor. The fifth metric that I look at is the shares outstanding. We want the shares outstanding to be decreasing, or basically having the company doing buybacks. We want the company to be buying back shares because if a company buys back shares, say you own 10 shares of a company and they have 100 shares outstanding, that means you'll own 10% of the company. However, say they buy back 10 shares and there's only 90 shares left and you keep 10 shares, then your overall ownership of the company will increase. So if they buy back shares, your overall percent ownership of the company will increase. However, if they increase shares, then you will actually own less of the company, even if you keep all the shares and do not sell. So that is why we want them to be buying back shares. However, Taiwan Semiconductor has kept their shares outstanding flat over the past 10 years. They have not bought back or diluted shareholders. So technically that is an X. However, at least they are not diluting us shareholders. Then I like to look at the debt to equity ratio, which is just the total amount of debt the company has divided by the total amount of assets they have. So we want this to be less than 1, meaning they have less debt than the amount of assets they have. Taiwan Semiconductor has a 0.27 debt to equity ratio, meaning they have 1/4 of the amount of assets they have in debt. So that is also another check mark. The final metric that I like to look at is the analyst expectations of future earnings per share. I want this to also be greater than 5% to show that analysts expect the company to grow at a pretty fast rate. If the company's earnings per share grows at a faster rate, that almost directly correlates with the stock price. So we want the future expectations to be pretty high as long as we buy the stock at the right price. Analysts expect Taiwan Semiconductor to grow at about a 21% rate in the next 5 years. So this is greatly higher than the 5% we want, and this is also another check mark for Taiwan Semiconductor. The final thing that I'm going to do with Taiwan Semiconductor stock is I'm going to value the company using this value calculator. This value calculator is linked in the description if you guys want to use it and value any other company you want to look at. But before we get into valuing Taiwan Semiconductor, if you guys can please hit the subscribe button and hit the like button. We are at over 500 subscribers. I just want to say thank you to all of you who have subscribed and supported the channel. But now let's get back into Taiwan Semiconductor stock. With this value calculator, you're going to have to use predictions of the future. So basically educated guesses. The first educated guess you're going to have to make is the revenue per share growth over the next 10 years. Analysts expected their earnings to grow at about 20% over the next 5 years, so I'm going to go at about an 18% revenue per share growth rate. Next, I need to predict the net profit margin in the next 10 years. As we can see here, the net profit margin has stayed between 37 and 40%. So I'm going to put this at about 38%. Then I skip the cash conversion. You do not have to put this in to get the right value. And then I go to the terminal PE ratio. I'm going to put a 22 PE ratio for Taiwan Semiconductor because I think they are a fast growing company and they do deserve the premium compared to the market. And the final thing I'm going to do is leave this discount rate at 15%. I personally use a 15% discount rate because the market on average returns 8%. However, since we are investing in individual companies and we are making predictions in the future that could be hard to predict, I'm going to use a margin of safety. In case we are wrong with some of these predictions, we could still make a substantial amount of money. With our value calculator, we can see that our fair value price is $221 per share. As of today, even though Taiwan Semiconductor is at all-time highs, it still looks pretty undervalued and could give you great returns even if you bought today. However, you would have to make sure that these predictions are right to you. If these predictions do seem right to you, however, you can make almost 16% if you bought today. Thanks for watching this video, guys. In the comments, please put whatever company you want me to analyze, and I'll probably analyze whatever company you guys put in the comments section. So thank you for watching this video. See ya.